Hello, I'm Richard Murphy. I've done a video on the risks that are created by the fact that quantitative easing has left around £800 billion held on deposit by the UK's banks and building societies with the Bank of England. The risk that is put forward by people like Robert Peston is that if interest rates were to rise from the 0.1% that is paid on these accounts at present, then the cost of servicing this supposed debt, although actually it's money, the cost of servicing this would increase. Now, let's be clear. At 0.1%, the cost of servicing 800 billion of debt is £800 million a year. Look, a staggering amount of money, but compared to the 56 billion a year that was forecast to be paid in interest for 2020-21, a drop in the ocean and part of an ongoing, very strong downward trend in the overall cost of debt servicing. But suppose we wanted to avoid this upside risk that if interest rates rose, as the Office for Budget Responsibility suggests they might by 2025 to 0.3%, or as Robert Peston clearly thinks likely, to a figure higher than that, and there are certainly other economists who share that view, how could we prevent this cost increasing? The answer is actually remarkably straightforward. What we have to do is quite simply issue new bonds. Now, that sounds illogical because the whole reason why these balances exist is because bonds have been cancelled. That's what quantitative easing does. But suppose that we insisted that these banks held the funds that they have with the Bank of England in a new type of bond specifically only available to them. After all, this is not penal. The money that they are holding was not generated by them from their banking activities. It was effectively gifted to them by the Bank of England as a result of its quantitative easing operations. They've done nothing to make this money. It is entirely central bank created. They happen to be the fortunate beneficiaries of it. Now suppose that this money was converted from being on a on-call deposit account where it is now, and it was instead made into what I would call a perpetual bond. A perpetual bond is one that literally lasts forever. Now, these are unusual. They have existed in UK history. They have existed in the history of other countries. A perpetual bond has no date for repayment. So it's like putting your money into a building society in a bond and being told, well, you can never have it back. All you get is your interest forever. But you can, of course, sell it. You could sell that bond to somebody else. So it's not quite as bad as it seems. Alternatively, make it a 100-year bond and there is a redemption date, but it's beyond anyone's planning horizon. And I guarantee you, in a century's time, inflation will have eroded the value of these bonds to the point where they would be almost irrelevant. In either case, what we would be doing was locking this money down at 0.1%, telling the banks this is what you've got, free of charge from the government, a massive deposit account balance, and we're willing to pay you 0.1% on it, which is the rate you are enjoying at present, and it's never going to go up. Would that be fair? Well, yes, of course it would, because the banks didn't create this money. It was created by the government. The bank is still getting a subsidy from the government forever for doing nothing. Most of us would not complain about that. Would it work? Yes. So long as sufficient money was left on these accounts that the UK banks and building societies have with the Bank of England to make sure that they can pay each other, which is what the fundamental role of these balances has been in history, but for which purpose 800 billion is not required. So put, say, 600 billion of the money into these perpetual bonds, lock the rate down to 0.1%, say that's it for at least 100 years or forever, and the problem of interest rate rises is solved literally overnight. And can anyone complain? Well, only the banks. Have they got good reason to do so? No, because they didn't even ask for this money in the first instance. They were given it, and as a consequence, they cannot now raise objection, and we have solved an economic problem. If all things were so simple to achieve, the economy would be much easier to run. And this one can be delivered. It just takes a little political will, and a problem is solved. Could be forever. Thanks for watching this video. If you've enjoyed it, I'm pleased. If you want to see other videos like this, there are links below this screen. If you want to subscribe, hit the subscribe button. Follow me on Twitter as well, @RichardJMurphy. Look at my blog, Tax Research UK. And if you'd like to donate, because this video series is being largely paid for by donations, there is a donations button on every single post on my blog. Thanks a lot.